Okay, so I'm back. Give me a minute. I want to call up something. Give me one sec. I found a great YouTube that I want to share with you. Because today we're talking about um the business budgeting process. So just bear with me. Hmm, perfect. Okay, give me one sec. I'm going to share this video with you right now. Okay, so you should be able to see that video. Let me know if you can't, and let's get started.
I'm Niall Carter Gray, virtual accountant and corny joke enthusiast who has been working with small businesses just like yours maintain their profitability. I've partnered with QuickBooks on this video series to help you run and grow your business. And today we are going to be talking about one of my favorite subjects, small business budgeting. Let's have some fun. What's that you say? You can count on me. Running your own business gives you the exciting opportunity to be your own boss, bring your vision to life, and direct your financial future. But to avoid failing within that first year, you want to be able to create a small business budget. So today we're going to talk about the benefits of creating that budget and how to do so. But before we continue, make sure to give this video a thumbs up and subscribe to the QuickBooks channel for more videos just like this. If you're an avid reader just like me, you can check the description below for a link to an article on this topic. So, what is a business budget? A business budget is an outline of a company's revenues, expenses, and profits over a period of time, typically monthly, quarterly, or annually. A good budget will assign a purpose for every dollar it intends to earn. This business budget will give you insights into where you're spending your money and where you possibly can cut back, which will allow you to be able to make better spending decisions and continuously improve earnings. Business budgets offer several key benefits, including allowing you, the business owner, to run your organization with confidence. It'll also allow you to identify any spending or cash flow issues right away. And then lastly, it will demonstrate to your creditors and investors positive money management. Now that we know what it is and why it's important, let's talk about the steps of actually creating that business budget. Step number 1, calculate all forms of income. Your gross income will allow you to understand exactly how much cash you have on hand to spend. Tracking this income over time will also give you insights into if your revenue is actually growing or if it's stagnant and it's time.
So she just this woman was excellent. She just tells, I like her style. She just tells you what you really need to know. Cash. You have to always keep an eye on your cash because that's going to really determine just what you could work with. Without cash, you're not going to be able to run a business. You need liquidity. I mean, even if your business is got value, it's like a person who has a house that has value or assets that have value, but they can't reach the assets. And that could be a problem. A lot of businesses that aren't terrible go out of business because they just don't have the cash to pay their bills. So she brings that point up, and I like that. That's an important part of the budgeting process.
To change your rates. If you want to see how much money you've brought in over time, just refer to the revenue section of your profit and loss statement. Step number 2, subtract your fixed cost. Once you've calculated your total income, you want to subtract out your fixed.
But that's an important part, and if you should have realized that, and you probably makes sense to you that that's such an important part of this unit and this class, is that you really have to understand fixed and variable costs. Without understanding your fixed costs, you're gonna be a prescription for disaster. What is a fixed cost? We've been talking about this. A fixed cost are the costs that you have, whether you produce or not. So you have to make that nut effectively. Think about it again in your own house. You got a rent or a mortgage. You got car payments. You've got certain costs that are going to come and go every month. And then there are going to be costs that are going to change based on your activity. Those are variable. If you decide to go on a vacation, if you decide to go out, if you decide to travel, if you decide to travel to work, if you have to go in certain days, those change with your activity. But fixed costs have to be met. So if I have a business that has, when I'm doing my budget, if I have a business that has, say, $10,000 in fixed costs every month, and I sell one unit, the fixed cost on that one unit is $10,000. Even if it's a pizza, let's say I'm a pizzeria owner, I sell the one pizza. At that point in time, my fixed cost is $10,000. Of course, I'm going to go out of business like that. But if I sell 10,000 pizzas, now my fixed cost drops to $1. So the other thing you want to understand about fixed costs is as you increase quantity, your fixed costs go lower and lower and lower. And then all you got to do is deal with the variable costs. Now, we've already done this, but I wanted to bring that point up because that's really important in terms of wrapping this class up.
Expenses. These are the costs that tend to stay consistent over the year. Think payments like rent, mortgage, salaries, things of that nature. Those costs that really don't change. Step number 3, subtract out your variable costs. In addition to your fixed costs.
Okay, so your variable costs we just talked about. That's going to be cost per unit as you keep increasing the units. So as you increase your units from 1 to 2 to 3, now go back to my pizzeria. She had $10,000 in fixed costs, but let's say on every pizza that she makes, her variable costs are going to be, say, $4 a pizza. So she knows that once she covers her 10,000, every time she sells a pizza, let's say she sells her average pizza for $20, and the pizza costs her $4 in variable cost, she's got $16 contribution margin. Take the $16 of contribution margin, divided by the 10,000, and that's her break even. Again, I can't stress this enough. So when you're creating your budget, these are things you have to think about before you even put pencil to paper. What are my fixed costs? What are my variable costs?
You may have variable costs that aren't always the same amount every single month. These costs may be a little harder to predict, but you can refer back to your old invoices and receipts to estimate them. These costs can include things such as material costs, outsourcing costs, and commissions. Step number 4, plan for emergencies and one-time expenses. As a business owner, you may have encountered some unexpected expenses, things like new equipment, new employees, or unplanned emergencies. So let's plan as much as you can by setting aside some cash to prepare for these unplanned events. Step number 5, it's time to draft that business budget. Now that you've reviewed your profit and loss statement and you've calculated your budgeted income and expenses, it's time to draft that business budget. Most companies opt for an annual budget broken down by months, but a good business budget will follow the format of your profit and loss statement, allowing you to track your actuals versus budgeted numbers throughout the year. As you're creating your business budget, you want to keep a few best practices in mind.
Now, whether your company is the Coca-Cola company or IBM or a small business or your personal budget, no matter how big or small, you have to realize that they're going to be emergency expenses. In big business, we have write-offs because of emergency expenses. In small businesses, it could be anything that happens in your own life. It could be, a faulty generator, an alternator on your car. It could be a flat tire. It could be something in your air conditioning system. Whatever it is, you have to understand that that's got to be accounted for in your budget.
First, you want to review your financial statements. Look for areas of continuous improvement and refine as necessary. After all, your budget isn't set in stone and is flexible. Next, you want to set goals and kind of avoid wishful thinking. Ultimately, it's better to be a little more conservative with your budget versus expecting the best case scenario. Break down your finances into areas of success and improvement. Replicate that success and continue to look for areas to further improve your business finances. This will lead to more profits in the long run. Building a business budget can feel overwhelming, but in order to maintain financial stability and move your business forward, it's essential. QuickBooks has tools that allow you to track your expenses, glean insights into your spending patterns, and assess where your business is financially. Check out their product features to learn more. They also have a free Excel template to help you build a budget for your business. Well, that's all the time I have budgeted today. If you like this video, make sure to give it a thumbs up and be sure to subscribe to the QuickBooks channel for more video content like this. All right, calculator.
All right, so I think she's terrific. I like what she did here. Because it simplifies it, and that's what I'm all about. Making things simple. And doing anything from understanding the business budget to something as small as a small business to as large as a corporation. You got to really just anything that's difficult in your life, you got to simplify. So she does that, and I thought she did a great job, and good job by her. So I think that whoever watches the video for the live chat, please pay attention to it. I thought she did great. If you don't, you'll see that, and that's something you want to use because that really wraps up and starts to explain the budgeting process. So I'm going to give it a minute and see if you guys have any questions. See if you have any questions. Any questions at all? While I'm waiting for your question. Work, so I can save it and you can get it. I think it's. Hold on. So remember, what did you take out of it? You took out fixed and variable costs. You took out planning for emergencies. You took out going over your cash flow. These are all things you should be thinking about. Okay. Any questions? Type them in the chat. Ask me questions, whatever they are. Please ask me. That's what I'm here for. Joe Class. Joe Class. Okay, so it's in module 6. It's all there for you, okay? I'm just see if there's anything in the chat. All right, so there is some in the chat. Let's see. Any questions? All right, so I'm assuming there's no other questions. Let's just really quickly look at the week's work. I'm going to share my screen again. You know what? For some reason, I lost this side panel, and I'm not sure why that happened. I don't know if anybody has an answer for that. I would greatly appreciate it. But this all of a sudden happened like, I mean, I have that, right? And now I have that. That's over there. It's like they changed everything. All right, so I see where they have that here. I see that. But for some reason at the end, I'm just asking a question. I don't even know what happened to Microsoft Teams here. I gotta ask somebody because it's really confusing to me. I lost my Microsoft Teams here. I don't know if anybody has an answer on that. I'd appreciate it. Just let me know. But at any rate, I'm going to go to chapter 6, and let's look at the costing process. And you're gonna do the stuff in McGraw-Hill. We talked about the budgeting process. What are processes in various business forms? This week's live chat is budgeting. The key word is budgeting. So for service businesses, you have to forecast sales or revenue from your services, like a law firm or a maid service company they mentioned. Anything where you're providing a service, you have to budget the hours that the people in your business are working or you're working and providing that service. That's the main thing. Okay, when you're doing a merchandise business where you're selling things, you're gonna really have to focus on your cost of goods sold. That's an important number. Because if I'm selling something, what's it costing me to either manufacture it, get it in the door, get the more raw materials in the door, buy it if I'm a wholesaler, if I'm a supermarket, I'm buying cereal at 70 cents a box, I'm selling it at $3 a box. I have to know my cost of goods sold. It's the only way I can effectively manage my business. If I'm the manufacturing business, well, so retail, you really want to know cost of goods sold, and you really want to know what this stuff costs you before you sell it. In the manufacturing business, you definitely want to know what your raw materials cost, what your labor is going into it, what your operation or your production process is, and what it is along the way. So when I think of manufacturing, we tend to think of cars. We tend to think of microwaves and things like that, or PCs, and that is an important part of my merchandising. But try to think of manufacturing. I'm sorry, but even you can boil it down to something again like a hamburger place or a pizzeria. You've got the raw materials, you need labor, you need energy, you need machinery, and then you put your pizza together or you put your hamburger together. So whatever it is, it's got to be part of that process. Okay. That's the main thing when you look at the budgeting process. All right, that's the main thing. There's not a hell of a lot here, but it really kind of wraps it up. And I thought that video wrapped it up pretty well. Who participates in the budgeting process? It's going to be, if we do it from a top-down approach, we're going to start with the managers or the heads of the company, and they're going to set the tone and review everything. And then it's going to go down to the lower levels where the work is actually getting done. But the most efficient and practical approach to budgeting is known as the participatory approach. The employees who are directly responsible for producing the sales or incurring costs are consulted regarding forecasted values. Participants value the budgeting process more if they are part of the process. That's an important part. You want the people in the process to be part of the process because then they have ownership. As a manager, you want your employees to have ownership in what they're doing. If they feel that they're just sitting there as functionaries, even if you're paying them, even if the benefits and the remuneration, which is the pay, is good, they're not going to be fully invested if they don't really see the end result. But when you include the participants in the process, now you're investing them in the business. And that's when people really feel this great kinship to a business. Even though participants are involved in the budgeting process, doesn't mean the participant will not under promise or over deliver to try to pad the budget. Because budget padding is always a possibility. Performance measures need to be established. That's the next point. We see that a lot in government, where the government gives out a budget and they stick to that budget. And if you don't use the entire budget, you are going to lose part of that budget. Most government employees will tell you that are managers in the government process, that has always been an issue. Okay, it's always been an issue for them. So you definitely want to be aware of the fact that that's going to happen. You know, they're going to want to spend the money before they lose the money. So here, I would say that you have to have accountability. Your auditors, your managers have to make sure that what they're actually putting in their budget, and it can happen in private business. I mean, if you're a manager and it's a pretty big company, you want to make sure you don't lose money, so you're going to pad the budget. Those kind of things cost the firm a lot of money, and it's something that you want to avoid. So the three things you want to pull away, the main things you want to pull away from our video is fix the variable costs. You want to pull away to avoid budget padding. You also want to think about having the different participants in the budget have ownership of the budget, some degree of ownership, and you want to also review and make sure the different processes. If you got a service business, you got a budget for services. If you got a if you got a wholesale, you got to take what you bought versus what you sold and think about what your spread is. In many ways, I think of the stock business, the brokerage business as a wholesale business. Why? Because we're buying stocks, or we're finding stocks at one price, we're selling it to our clients at another. Even if we enhance it, we're putting a spread on it, right? And even if you think about it, even in a supermarket, they may take like most of the more raw materials, put it in a different package, create it or something with a couple of other products. They may take, like, sometimes you'll see they'll take the turkey and then they'll put it in a container. Then they'll take some cranberry sauce that they sell and they'll put it in another container. Then they'll take sauce and they make a dinner out of it. They really are still in the wholesale business. They've just enhanced their product to make the sale, and that's part of their cost of goods sold. They're not really creating; they're more like repackaging. So this is not a marketing class, but you want to think about that. And then the third part is just the flat out manufacturing, the real manufacturing, where we actually get all the raw materials and make something. So be aware of those three types. But that's really it for this class. The key word in this class is budgeting. It's been a pleasure, and I've said it in my message, how honored I am to have worked with you. You guys have done great. If you need anything, you know where I am the rest of the week. Get your work done, and I'll get the grades done promptly. But if we meet again in another class, I would love it. And enjoy the good weather while it lasts. And God bless all of you.
Real quick, Professor Strapacci, so I inputted the code word and I accidentally put in budget, didn't realize it's budgeting.
Sorry, it's all right.
Please be on the lookout.
Yeah, not to worry. I'm pretty loose on that stuff. Okay, it's great to meet you, Charlene.
Otherwise, thank you so much for your guidance through this term.
I appreciate that, and I appreciate the hard work you guys put in. All right, guys, I'll see you. Again, I hope to see you in other classes. Have a great rest of the week, and again, enjoy the good weather.
Thank you.
Thank you, Andrew.
Thank you. Take care.
Thank you, Chelsea. I appreciate your hard work. Viviana,
thank you so much, Professor.
Pleasure meeting you, Viviana.
You too. Thank you.
All right, great.